Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. We've got a couple hot zones that we're taking a look at as we go into the morning. So let's start there because there is, for me, the next week or so, it's going to be a very concerted effort to start downsizing a number of swings that we have open, many of which are already at break even or trailing stops. But I definitely want to, as we go into non-farm payroll and the four big pieces of jobs data that we're going to get this week, I want to really start to wind down some of these positions so that going into next week, I've got more of an open book. I'm a little bit more looking at a blank page and managing open positions. But here's why. Let's go ahead and jump on over to the calendar. This is why I want to do all this. If we take a look at today, Tuesday, yesterday was an easy one. No hot zones, nothing major to deal with. JOLTS is coming up at 10 a.m. There are four jobs numbers that I look at, and there's an order of importance. Number one is non-farm, and that's coming up on Friday, November 1. The second most important that I look at is the JOLTS job opening number. And I went into a lot of detail on this in this week's top tier outlook. So for those of you that do get the top tier outlook, check that out. It's a lot of explainers about this time of year, the kind of situation we are with the hot zones, etc. So JOLTS is number two. Number three, and it's not really that important a hot zone, is the initial claim. So we get this every Thursday. So when we take a look at what's going on with the weekly picture, think of that as more of a 4-week moving average type look, not each economic event, each hot zone is the big impact, but the general trend of that data, especially something like that we get weekly. All right, the fourth is a quirky one, and maybe you've heard of this one before, but it's called the Challenger Gray and Christmas. So it's actually, they'll call it the Challenger Job Cuts, but it's actually Challenger Gray Christmas. They put out this number and it's at 7:30 on Thursday, 31st. And I look at those four, none more important than non-farm payroll. Why the extreme when it comes to looking at employment? Because the Federal Reserve has a dual mandate, inflation and employment. And once the cuts have begun, the two big questions are, does the consumer have a job? And is the consumer consuming, right? Whether that be retail sales, home sales, etc. The activity we see, the consumer, right? Their spending activity is going to become increasingly important. And so that's where we are this week. As if that isn't enough, we go into early next week and oh yeah, we have an election. Now, I'll tell you straight out, I have a zero politics policy in my room. It's not even a one strike, zero. The reason is it's not a trade. Anything that is, and I get this question a lot every 4 years, which is, look, we have two big elections, a presidential and the congressional election. And the question there becomes is there an election trade? Ooh, okay. And a smoothie is arriving. What is it? What is it today?
Blueberry and apple.
Blueberry and apple. All right. Blueberry and apple today. All right. So if we have this notion, and please, there is no election trade. However, there are trends. So how about we think about, and how many of you out there are going, okay, Rag, I keep hearing there's an election trade of some sort. Usually the equity markets do better after an election, regardless who is in office. So let's just take that out of the way. What we want to look at are hot zone trends, right? Hot zone, the election, trend, sector performance. And if we just do that, we can take the emotion and frankly, the topic, which is really no different than any other effect on the financial markets, right? What's already moving? What's already moving? Take a look at trends in gold. Take a look at trends in bonds. Take a look at trends in individual industries, because normally what you'll see is, yes, there are certain industries that are going to benefit from one person in office and the other, but we don't know what's going to happen in those, and there's no trade until there's a trend. Keep that in mind. There's no trade until there's a trend, and we're looking at a hot zone trend. It just happens to be something that happens every 4 years. Take a look at, and this is what I've noticed the last couple of days. We've seen that solar has made a pretty big move. And clean energy has made a pretty decent little move. Neither are trends. And actually, the number one leading sector, just to really emphasize how agnostic I am about these things, look at Jets. Jets is moving higher. It has been all month long, right? So keep that in mind. This notion of an election volatility is fine. This notion of the trend before the election is fine. But by the way, I do the same thing with earnings. What's the trend in a stock before earnings? And I'd rather play the ramp up, not the event. I don't play earnings. I don't hate my money. I don't play the election result. I play the ramp up. I play the trend in front of the event because we don't hate our money, right? Okay, so let's get to it. Rag, all right, having said all that, because all that matters is what do you have? This is what we've got going into today, Tuesday. So this was Monday's Trade Alert Recap. Every entry, every exit, every day, we send them out to members. This is what we've got. You know what's been working really good? Gold, right? Who cares why? Gold is moving, and it has been for the better part of a couple months. That's probably one of the best trades we have on the books right now, the positions in gold. Gold miners has been a little tricky. Now, gold miners is not going to always move with gold, especially when the number one weighted stock in that sector, Newmont Mining, got absolutely socked. And it got a punch in the gut. And it's taking a knee right now. And so that's kind of keeping GDX, gold miners, a little laggy behind what has been a lot of strength in gold. Bank of America, Cisco, Disney. So I've got exposure to financials, a little bit of tech, in and out performer, and communications. We closed out one leg of GDX because I just couldn't justify hanging on to it, right? Take a look. I got in at 235. I had to close it out at 174. Yes, trading means taking losses. Trading is not adding, right? Trading is not rolling. Trading is not finding some way to avoid taking loss. Just take the stinking loss. Kill the monster while it's small. Don't feed it, right? That's what most traders do. They feed the monster. Let's add to the position. Let's roll it, all those kinds of things. And then they wonder why they blow up an account. Most of successful trading is pretty counterintuitive. Because it's counterintuitive, it's pretty uncommon. And that's just the way it is. PayPal. All right, we had a trade in PayPal. Do I mind taking a loss from 235 to 274 when we just took PayPal from 525 to 795? Leave your winners to keep working. Kill the monster while they're small. That's a really good example there on the closed trades of something that I did yesterday. We've already moved to break even on a number of these trades. So the ones that I'm probably most, I don't want to use the word concerned, but the ones that I really want to be actively managing are the nice winner in gold. We have a T2 coming up. We have a optional target in Bank of America, which means that I give my members an opportunity to say, look, we do have some pretty major events coming up. The market might just kind of find a range and stay there going into next week. So why not take profits when we can, pay ourselves when we can, not when we have to. It's kind of Raghee 101. And that means optional targets are going to be a great way to manage risk. Whoa, Raghee, a target managing risk? Absolutely. One of the worst things traders can do is have this sort of pie in the sky, birthday candle wish type thinking of I'm going to buy something for $1.78 and I'm not going to get out until I make 100%, as if that's a goal, right? 100% is not a goal. 100% is nice, but it's not the goal. If I don't pay myself when I can, not when I have to, then I'm not able to ratchet up the risk management and protect my capital. So if you've never thought about this before, it's what we teach in the Sector Secrets Mastery. Your first target is your first step in risk management. So that's definitely something we want to keep an eye on. And so Bank of America having the ability to move that, and Disney, right? We had optional targets on both. So these two could be and should be at break even, right? So the only trade that I have right now that's in a risk environment, and I might end up taking a loss on it, who knows? But it's not going to be a $210 loss, right? We don't max debit. Again, don't hate our money. If I have anything of those 6 positions that could be a loss, it's going to be Cisco, because the rest of them are either at a break even, already paid ourselves, they've added something to the account, not in a position to take something, meaning my capital, out of the account. All right, I'm really dying to see what this blueberry apple smoothie concoction. Oh my gosh, it's really thick. a little tart with a Granny Smith apple. All right, that's different. I'll wake you up in the morning. Okay, so that's what we've got going on our positions and managing what we have. And again, the most important thing to me is, Rob, what do you have? Right? Don't tell me what you want to do. Don't tell me what looks good. Tell me what you got. And that'll tell us a lot about what's going on. All right, so that's what we have there. Questions. Sundu is asking about CRWD. Sure. So those of you that have watched this show for a little while, one of the things that when we're thinking about or communicating anything, and I would love to make this the way we all, right? You and me talk about trading. I remember when I was a kid in middle school, you could call up the radio station and call in your favorite song, right? For me, that time, that was a big deal, all right? And so you call your radio station up and they play your song. We're adults now, although sometimes I still feel like I'm in middle school. We're adults now, right? So are we calling up Top 40 radio and saying, hey, play this song? Or can we have a conversation about what it is we want to do? What time frame are we looking at, right? What is the position you're looking to build? Long, short? Why is this trading? Why is this particular symbol even on the radar? If our questions are going to be really the process by which we think, the better the question, the better the answer, right? So CRWD, what are my thoughts on it? Let's bullish chop, right? That's the answer. It's bullish chop. All right. Jazz is asking, did I happen to pick up XME on the pullback? I'm in some November calls, taking profits along the way. Okay. So again, I'm going to presume it's daily time frame. However, I'm going to presume it's because Jazz, if you're looking at a pullback buy and you've been watching the show for any length of time, you know that what we're looking at is an uptrend, right? We're looking at an uptrend. And here we go. Uptrend. So what's the pullback? Now, is that a useful pullback for me? This Darvis right there would not have been there. So I want to be straight up with everybody. This Darvis would not have been there. What we did end up with was a minor low pattern, but it was well shy of the mean reversion, which is this zone right in here, these lines right in here. So no, I didn't. It's a nice pullback. If you're looking at the minor low, not too bad, but no, it's not something I was looking at. However, there's another thing we can do is just go from minor low to minor high and cut the range in half. So if the 50% was in play and then you got a minor low, that's the way I would think about that setup. So no, I'm not in that one, Jazz. I didn't get a setup that I really liked. XME is kind of cool because of gold and because of silver. I look at XME, though, primarily as a copper conversation. So that's another reason I would kind of stay away from that one right now. But nice trade. I mean, no doubt about it. Way to play the pullback, right? Way to find the trend. Find a way to play the pullback, and it's paying you. I like it. All right, moving on. KRE, and for those you asking about different positions, I mean, I send out the recaps every day, so I mean, you can keep up with what we bought it at, what we exited at, etc. All right. KRE, this has been a hot month. Yes, I agree, David. It has. What does David mean by this has been a hot month? Take a look at the KRE regional banks and where it ranks. It's even doing better than financials. I mean, look at that. It's doing even better than financials. When we take a look at the normalized performance month to date, so 29 days into October, that's the month to date. What other stocks have followed through with this? David, this is what's interesting about the KRE. Much like if you go up the food chain to the sector, go up the food chain to the index, where does KRE belong? It belongs to the Russell. The Russell's not high concentration weighted, and neither is KRE. So there's not a lot of, hey, this stock, the way we could look at Berkshire or JP Morgan for the financials, there's not really that in KRE, although we did take a position and took a small winner out of Zion. So we did play Zion. That's about the only stock that, when I think about the hierarchy of index sector stock, Russell regional banks and usually Zion, but it's going to shuffle up so often because there's no high concentration waiting there. That therefore I really end up looking at KRE for the most part. And one of our members said, "Hey, let's look at Zion. Good structure. Pull back buy to the daily price movement range," and that's what we did on that one. That was actually a trade week we did. All right. Ryan asks, what am I looking at the indices doing today? Where are they going to be at 4 p.m.? What I'm looking at the indices doing today is they're going to open at 9:30, unless you're trading futures, in which case they're already open. All right, next up, Costco. So why would we look at Costco in terms of anything else, right? So this is where we got to go upstream, all right? And if you're new to the process, the idea is always index sector stock alignment. That's where the follow through is. All right, index sector stock alignment. So if I'm thinking about Costco within the structure of the XL, let's go over here. I'm going to look at XLP staples. There we go. XLP has not been, let's go back to what the performance has been. Would I be looking at staples? We got to go through a process, gang, that is making some kind of probabilistic decision about follow through. Would I be looking at anything in staples? Sure, there's a defensive quality to it. There's a possibility that the more fear there is in the market, the more something like staples could benefit. But if it's not already benefiting now, am I going to presume it suddenly will when it's down over 2% this month? So this is where we have to ask ourselves, why would I want to look at anything in staples? And gang, the process is not going to be what's my favorite stock. Right now, I will say, if I take a look at all the stocks and staples, here's Costco. Remember, this is a heavy sector. What looks better? Walmart and Philip Morris. And I think the biggest thing that we all need to do as traders is ask ourselves, why are we looking at a particular stock? Right? I have no idea why you're looking at it, Miglani, but, or the time frame or anything else. But why this stock? Is it because of earnings? Is it because of a trend? Is it just your favorite stock? So why would this earn? And we have to ask ourselves this, gang. You might say, Rob, why in Costco? While we're on the topic, why are you not Costco? Cisco. Why are you in Cisco? All right. So if we're going to crack open a sector, whatever it may be, if I'm looking at NASDAQ, I'm going to look at a number of the stocks in the NASDAQ. This happens to be the XLK, the number one sector in the NASDAQ, the number one sector in the S&P. Why would I be looking at Costco, and what else I keep saying Costco, sorry, Cisco. Why would I be looking at Cisco, and what else would I be looking at? Here's Cisco, ACN, CRM, Apple, NVIDIA, right? That's how I think about where probabilistic, right, thinking and follow through would be. What has the best chance of continuing? If the index is up, if the sector it belongs to is up, if the stock is up. That's alignment, gang. And when I look back in October, August, September, October have all been positive months. This entire year has been a very good year. Why? Because when we have trends, and we can find the trends, and they're not everywhere, we have the best chance for follow through. It's not a matter of one stock having, this is what traders think trading is. And it's unfortunate. This is not trading. Taking a binary guess on which way Tesla goes or IBM. This is not trading. I promise you, gang, this is not trading. Taking a binary guess on where IBM goes. You know what else is not trading? Listen to a hedge fund guy who built his position in Q1 of this year tell everybody that China is the place to be in basically Q3. That's not trading either. This is FXI, by the way. So if you take a look at when a lot of these hedges, this one in particular, they gave him an infomercial on television, said, hey, China's the place to be. And then so everyone tripped all over themselves to get in, and this is where it is. And whoosh, where do you think he took his profits? Most of the they have to tell you where they got in after the fact, but every quarter, right? Where do you think he took his profits, or at least adjusted his risk, right? Up in here. You think if you bought something in the mid 20s, we're trading at 32, and you've got billions of dollars, if not hundreds of million dollars under management, and then the television station gives you an infomercial to tell everyone to buy this thing, that's not trading either, right? Unfortunately, those are the things that hurt traders the most, right? And as I get into the end of the year, I look at why are we focusing on things that are not necessarily, moving with, alignment. Question on MSTR. I'll tell you what, it's punching up to higher highs. Momentum traders love this stuff, which is great, which is fine. There's a pullback buy. There was one on the 17th. You might look at a minor low on the 23rd. I don't play things at higher highs. Momentum traders love this stuff, but as far as I'm concerned, I'm going to give you this every day that I'm here in the show. We look at this almost every day. I send this out to my master every day until I see this for people playing earnings, for momentum trading. Yeah, I can't play stuff like this. It makes absolutely no sense to me. And then I also think about, what does this looks like SMCI. This is what that looks like. It's an SMCI moment. I'm happy for momentum traders. You want to play a meme stock because that's what that looks like to me. How did SMCI end? Same thing. That's what it reminds me of. I don't have any idea what MSTR is, why it's doing what it's doing. But just please remember, these usually end a very specific way. Be careful with momentum trading at buying higher highs because the presumption always is, right, that someone's willing to buy a high that's higher than wherever you got in. And for me, you might say, but Ragh, you're buying into pullbacks in the context of a trend. If continuation is the probability, both exhaustion traders and momentum traders tend to benefit from the same thing, granted, but the risk reward ratio is markedly different. So thank you for the question, Bill. I haven't been watching that at all, right? What have I been doing? I'm playing something boring like gold, right? I'm playing something boring like gold, moving higher. This is my kind of trade. World's most boring trader. If you want some excitement, bot said, hey, yeah, MSTR is tracking with Bitcoin. Great, cool, enjoy. That just won't be where I'm at. However, if there's index sector stock, here's something to work with. If the index is basically Bitcoin, right, then there's not really a sector. So if certain stocks are going to track with Bitcoin, I just think of things like Mara and Coin. Great. Not everything's benefiting as Bitcoin's moving higher. So you have to find something that has some kind of correlation. All right, gang, that's a wrap. Sorry I went over. I will see you all tomorrow. Same time, same station. Think outside the box, gang. Think outside the box. Because if the box worked, everybody would be profitable on a year like this, which has been exceptionally good. I believe we've only had 2 down months this year. So think about what you're doing and is it mapping to where you want to go? I always ask myself that. If not, have a good friend look you in the eye with care and say, how's that working out for you? If it's not working, we always have the chance to rebuild and reconsider what we're doing. And now we're doing it. That's the cool thing about trading. We can always adjust and adapt. All right, gang, until tomorrow.